As Ukraine and Russia discuss a potential ceasefire, markets are eyeing reconstruction opportunities. The prospect of a Russia-Ukraine truce is gaining traction. Peace could be on the horizon, revealing one of the biggest reconstruction opportunities of the coming years. The World Bank has estimated it will cost $524 billion to rebuild Ukraine's economy. So, who will benefit? Joachim Klement is head of strategy at Panmure Liberum. Well, Joachim, Citigroup are expecting a lot of opportunity to do business in Ukraine once the war ends. Where does this opportunity lie?
Well, there's a whole range of industries that will benefit. In the first instance, it's going to be infrastructure and construction companies because roads have to be rebuilt, houses have to be built. But that also then expands to energy and digital infrastructure. So it spans quite a number of industries.
Well, a large amount of Germany's fiscal stimulus is allocated to infrastructure. Will the rebuilding of Ukraine be a growth engine for Germany and the rest of Europe?
Well, the German infrastructure package will only be used in Germany, but there are certainly German companies that will get an additional boost from any reconstruction efforts in Ukraine, because what we can expect is that the companies that will be hired to rebuild Ukraine will, on the one hand, be regional companies in Ukraine and neighboring countries, but on the other hand, companies in major donor countries like Germany or France.
Well, you said that construction stocks are the sector to watch. Which companies are jumping out to really benefit?
Well, in my view, Austrian construction company Strabag is one to watch in the sense that this is a company that has about half of its revenues from Germany, but then has a very strong market position also in Poland, and up until 2019 was present in the Ukraine. Other companies that are worth a look are French infrastructure giant Vinci, for example.
Meanwhile, defence stocks were the hottest sector during the first half of the year. What does peace mean for these stocks?
Well, at the moment, they're giving back a lot of their huge gains they've had over the last couple of years. But we think that this temporary weakness is definitely overdone, because the real story for defense stocks in Europe is Europe's rearmament, which isn't going away, and in fact is something that will continue into 2030 and beyond. And if you look at it from that perspective, the weakness that we see in defense stocks right now is a very good buying opportunity for the next 5 years.
The US has privileged access to new investment projects to develop Ukraine's natural resources. Is there untapped potential there?
I don't really think so. First of all, it will take many, many years before those mines and resources are fully developed and can start producing ore that can be delivered to the market. And then there's always the question, if you're talking about investment horizons of 5 years or more, whether a new US government will not come in and rip up those contracts altogether, simply because nobody except the current administration thinks that these are fair contracts.
That was Joachim Klement from Panmure Liberum. Don't forget, you can watch more videos on Reuters.com.